Jelly Cycles here with an update on January the 14th. I'll probably be making two videos today, general updates, and then a look into cycles, finding cycles and visualizing them. So, current situation. Last week I had a feeling we would squeeze right back up again, and let's have a look. The weekly data and the 21-month offset, the band offset here, we see we are not really able to break this offset and generate a good sell signal here. So it could go either way. I'm beginning to lose my bias, at least my edge for any more bear market here. I have what I call my, let's call it just my scenario or my pattern recognition. We quickly have to crash down here to stay in this scenario. This one as well. So when looking back quite a bit here, this I posted in April. Back in April I was talking about the crash window in the fall of last year, and a possible bear market low at the end of this crash window around October. And if we saw much weakness in this crash window, we could go on with lower lows in the winter or even the summer in 23. But this crash window, we did go to lower lows, but we didn't really crash. And the easy downside of this bear market was over in October. After that, there's no guarantee for more downside. But going down to October, I was pretty confident about that one. So there was still, another chart. Let's see. We have this one. We are breaking above this falling trend line. We are breaking above the 200-day moving average. This really doesn't look bearish. But as long as we are below the 40-week offset, we're still in the bear market. But it doesn't take much here, the coming weeks here, to break above this offset over 40 weeks. And if we break above that, I have edge for upside the coming years. So when the bear market is over, then it's over. Then we are in a bull market. But we are still not there quite yet. But if this is a bear market rally, it's not a normal bear market rally. And I'll come back to that one. So it still may be a bear market rally. Let's see where to go next. We have to look at the cycles. Well, I'm jumping over to a comparison. This is compared with the bear market of 73, 74, and these two are not aligned by the price high, but by they are starting at the exact same day of the 7-year cycle. So as you see, in this 7-year cycle, these two bear markets have behaved very similar. Not that much the recent months, but at this point, this bear market from the 70s started its capitulation phase. And last week I talked about irregular bear market rallies, and if we look at the bear market from the 2000 top, here in red. This is also aligned by the cycle, and as we see, the current bear market started later in the cycle than the 2000 top. But here we see the irregular bear market rally up from the 9/11 low, and we had a bear market rally topping out pretty normal, but then it didn't capitulate. But we actually made a higher low, establishing an uptrend, and here we broke falling trend line, and we broke above the 200-day moving average. Sounds familiar? That's what we are doing now. But still, we couldn't break to higher highs. It was more like a double top, and then we turned down and finally got the capitulation. So we got this trend line, and then we broke it. And also notice that happened at about the same time as now in the 7-year cycle. So the capitulation phase in the 70s and 2002 happened at about the same time in the 7-year cycle. So I'm not excluding that we are into that here, but I'm about to lose my edge for more bear market here. We have just gone sideways for 6 months now, but if we start to go down again here in January, breaking below the low from around New Year, then we're back on track. But as long as we stay up here at the current level, the S&P 4000, and if we go more sideways here, and the longer we stay up here, the more likely we are to start a bull market. So looking at cycles, let's have a look at the 16-week cycle. So the 16-week cycle is about to make a low where we are now, and so the low around New Year, that could have been the cycle low, an early low, a bullish early low. If so, we could rally up to March and break up and have a new bull market. That's very possible. However, I would still have a look at the 10-week cycle. That's been working rather nice. We had a low here, a low there. Let's look at the tops. At the top here, early top there, a top here, a small top there, top here. Here it gets kind of messy, And anyway, you see, the current position here, this cycle is going down. So the low around New Year, that was perhaps the 10-week cycle low, a bit late, and this small bounce the recent week, that could be the cycle top, and we could go down into February. So I still expect this to turn down if these two cycles work. They are both pointing down here still. Then let's look at the quarterly cycle. That's not actually a cycle, but yeah. So now we're into a new earnings season, and as you see, we start to rally, as this earnings cycle says. It wants to rally into mid-February. So if we have good expectations and we get good earnings, this earnings cycle could succeed, and we could rally and have a new bull market. So we need bad news here, and bad expectations, and bad expected earnings going forward. So yeah, more about cycles in the next video. See ya!